Okay, good morning, traders. Good morning, all. Let's see who we've got on today. You'll get up and racing. Just play around with this. Excuse me. All right. G'day, Helen. All right, let's get up and racing. Thanks for joining me, guys. The morning report. It's trade setup. So we just going to go through obviously what happened overnight. What's going to move our markets today. Look at a few currencies, um, major indices, and then just see what could be setting up for today. So we'll start off with, g'day, Lauren. Here we go. We'll start off with just some currencies. So the move last night was on the back of the US dollar and manufacturing data. So manufacturing data coming out, I think at midnight. I think it was 11:30. The market opened up at 11:30. So we'll just go to, this is the Dow. Oops. No, don't do that. Here we go. Auto, there we go. So the market was looking, we're talking about this potentially holding up yesterday. This zone potentially holding up yesterday because the market was being supported. They were happy with the economic data, um, looking for a trade war to, something to get sorted out on that front. Potentially look for that pullback and then holding a higher low and then going back up. Everything was not looking too bad up until last night when data come out, manufacturing data, and showing a slowing of more than expected. So it looks like they're still under fire. Now, Trump has obviously got on Twitter raging against the Fed, saying it's their fault for manufacturing is under pressure because they're not lowering rates. The problem is you can't just expect them to lower rates to make you happy, to make him happy. And he's been just constantly barraged, and the tone he's has it's just, I'm surprised he's still a president, to be honest. So his impeachment might fix that out, but the tone he used and the language he uses, calling them pathetic and just, it's just silly. But anyway, he's got out there and raging, saying he wants lower rates. The problem is with lower interest rates is that it's just the Fed at the moment is obviously focused on data. They're not focused on what he wants. They're focused on data like they should be and like they always have been. The data coming out now, manufacturing is slowing, yet they know that. They expect that it has been slowing for a little while, and they are under pressure, maybe a bit more than what they expect. Um, but it's more the consumers. The consumers start to ease. We saw some data previously, then they might be forced into another rate cut or a series. But basically, I think the last cut, half of them, or just under half of them, were against really cutting rates. Okay, they went through with it, and they're probably, unless anything changes dramatically, they're still growing around 2%, which is the lower end of their range, but they're still growing. And um, it's interesting to see, obviously, US dollars being supported also by, was it the difference between, or the major gap between other interest rates, say Europe, Japan, Aussie now, getting belted yesterday. The gap between there, so it's getting bought up for the differential. So most currencies are going to flow into the currency with a higher rate, so buying into that, which is the US, and selling others. So you can see that in euro is getting pressured, the pound, the Aussie, they're all flowing out of those currencies to higher yielding. So until they do cut rates, then Trump's not going to get his weaker US dollar. We did see it sell off yesterday on the anticipation they're going to cut rates. Now, if data comes back out again and it's actually in line with expectations or showing some more positive than expected, then the US dollar is just going to turn. And you can see that the US dollar has been choppy. The longer term is actually heading up. I haven't got a chart of that, but it's just grinding up. It's not in a big uptrend, but it's a solid sort of well established channel. So it's just banging around between highs and lows, but longer term is edging higher. So that's pressuring currencies, and that's what's caused that trigger basically from the open on the Dow. The open was here, was it? Yeah, so this is the open, popped up, and that's not the Dow. And then got smacked. That's not right, is it? I'm on the hourly chart, sorry. Let me just go to the 30-minute. Got my numbers wrong. So it was here. So that was the open 11:30. Data come out, bang, down she goes, and spent all session just selling off. And it was probably one of the biggest sell-offs they've had for a little while now. Hopefully for some reason, my internet is playing around. It's just not stable enough. So hopefully that's still coming through okay. If you get it buffering, it's just because I'm having problems with that connection by the looks of it. I'm just watching the numbers tick over. All right, we'll power on. We'll keep pushing forward. So that was the Dow last night. S&P is much the same. We just got that 1 hour chart. We'll go to a 30 again. The market's been pressing down. It opened up, bang, straight down after the data release. So they were just triggered off that level, and there's more of a level around here. Just washing that out, getting the buyers in, and then boom, out down they go. So that would have dragged in a few buyers, probably that open there, looking for a gunning up to that, especially after this sort of move, holding, it's grinding lower, gap up through these previous lower highs. That just opened up, popped through there. That would have dragged in a few buyers looking for a move up to 30.21, and they were caught off guard by a lot weaker than expected manufacturing and the sell-off there. So that was what we saw on Europe. DAX, you can see here, got smacked. They already had some weaker manufacturing. So manufacturing below 50 showing contraction, above has shown expansion. So it's been below 50 for a while. It didn't get any worse, but it's still contracting from data. So they had manufacturing data come out of, I think it was Germany and the Eurozone prior to the release. So they gapped up on the open, really on the back of what happened in the US the prior night's rally. Gapped up, retested these highs, was selling down anyway. It was under pressure a little bit, consolidated, then US opened, and it's just the final few hours of the DAX session and the UK session also where it got belted. So there might be more to come tonight on the open of the DAX and the FTSE because I think they close at 1:30. Yeah, so they must, or 1:30, 2 o'clock. So they close at, around that time there. The US had already been, powering on the downside there, but they continued on into the close, the US. So there's probably more, you'd say there's more to come on the DAX as well. So it all brings about further rate cuts with pressure on this market. They're still contracting, manufacturing still contracting in the Eurozone. I'll spit it out eventually. Probably leading towards people thinking about more rates cuts, which it'll be interesting. Each time there's talk of rate cuts, whether it's in Europe or the US or even Australia, we bounced. I mean, anyone see that? Basically on 2:30, the news out, they cut rates from 1% to 2%, sorry, 1% to 0.75% yesterday on the RBA. And the market took off. They took off because expectations for further rate cuts if need be, which sooner or later, I just don't see that buoying the economy. I know it's cheaper money and all that sort of stuff for debt, but debt levels are quite high. They're just buoying the housing market really in Australia, and it's going to be interesting to see how that plays out. Gold. So gold did get a bounce, but I think what I'm really looking at on gold is you can see the market's popped up. We've talked about this a few times. We're on the hourly chart now. It's pushed down, retested the lows, tried to go up again, built a lower high and extended lower. But this level there is basically from that extension lower. So you get that original move lower, that's your grind back up, and your secondary move lower. It's just taken us straight back down here where it did find some buying from support. So I think it was getting bought up from about 6 o'clock. So that was, Eurozone data wasn't too flash. It was getting supported, so they're getting some bargain hunters jumping into gold there, and then the US come out with, rubbish data. The market collapsed, gold took off. So that was, whether that's more based on, because the market get knocked about what, $20 the prior night, we make it back about 15. So there's, we're still short of the previous session's sell-off. So whether that's just based around a weaker US dollar, obviously with gold being linked like a currency, US down, gold up, basically. Whether it's that or it is safe haven buying, I think bond yields did drop meaning bonds rallied on the back of safe haven buying also. The place to park your cash at the moment is the US dollar, but it did sell off last night. So there is a bit of safe haven, maybe a bit of safe haven buying there. You can see on the yen, we'll take a look at that in a sec, dropped like a stone. This is the yen here. So that, double top in here, major double top, we're on the 30-minute chart now, but double top in there. This doesn't look too pretty. And I mean, if you can extend this out, if we can do that, let me just make this as an arrow. I like my arrows better. So if you do extend this out, now it's not going to make any sense, is it? It's going to be straight back down to support. Anyway, I thought that hasn't built a lower high just yet, so forget about what I was just saying. Go. So you get the market move down here. If we press down and we hold a lower high, we could be taken out. I would expect a potential deeper correction through 106 or that, so 107 mark, or at least a retest down here. We just want to see if we can hold, maybe grind back up, hold a lower high in the US dollar, and you might get another press down in the US dollar, which means maybe more buoyancy in the Aussie, the pound, the euro. But the yen looks like it's set to come under fire again. And you can see, by the way, it's powered down here, contracting. It's potentially could extend that move. So yeah, US dollar, maybe that was exacerbated by the yen safe haven buying. Safe haven buying is just, and US dollar selling, it's just that perfect storm to send the yen lower, or the US yen lower. Here we go, I got frogs in my throat now. That was it. You can see the Aussie, all the currencies are basically, they got knocked about by the US dollar fall, but the Aussie was already heading south. So we saw, it's been heading south for a while now, pressuring. We had an offer zone around that 67.80. Sellers were piling in, did spike it back up, tried to wash that out, and that would have caught a few. Anyone sort of been selling with these lower highs coming in to the RBA, just got caught off, maybe washed out, and then the market turned around and smashed straight through 67.45 support right into a bid zone. So for now, if we see this continue to ease on momentum, we're in, we've gone from overbought to oversold, and with that little pop up there, it's not too strong, as in from the buyers. So we could see some more selling pressure come in and drive it through these lows, 67.71. So it could be more pressure to come, or we just pull back, build a higher low, and do a deeper squeeze on the sellers. So it tend to probably happen coming into 4 o'clock once Europe opens, because it tends to be the reverse of what you think on the Aussie. So what I think is, okay, people are expecting that to sell off. They might be coming in and getting squeezed back out with a deeper correction or deeper pullback before it does build that major lower high and head south. So that's your currencies. So the Aussie, let's just take so you can see, obviously, Euro's under pressure, which you can see here. Euro's under pressure heading south. It's holding below a key inside liquidity zone at 109.50. So there's potential for that to drag low. If it goes up through there, then that's changing the trend, the recent downtrend on the euro, and we could be looking at a bit of a contraction back up again, or a bit of a pullback from that downtrend. And the pound was under pressure and then bounced back quite strong. Still got a liquidity zone that's holding it down. Sellers, 123, say 40, 30, 30, 40 zone. You can see it's touched in here, sold off from there, again, retested it, sold off, and then you got this big sell-off before it bounced straight back up in there. So anyone that's bought it off the support, potentially it's a good spot to exit out of a position. And it just potentially holding a lower high here. We just have to see which way it squeezes, whether we squeeze out these longs that built up or continue to put pressure on the downside. All right, so that's it. Let's just take a look at the SPY now. So it's popped up on the open. Excuse me. Wouldn't be surprised. I mean, either way, the way this market's been, we've come back down into 66.46. We did straight back down to that level during the European session. We're just easing up off that. So if this market opens, opens weak, we're expecting the ASX to open down, 70, 75 points from yesterday's close. So that's pretty much a beatdown on the open. So it'll be interesting to see whether the market sees that, okay, that's enough. We're going to you get some opportunistic buying, which is And after the last recent day's price action, don't expect if we get retail jumping into the market looking at that pullback as a prime buying opportunity, or whether they just get a bit nervous and start to sell off even further. So where SPY at the moment is hovering just above that 66.46, could extend to 34, which means another 30 points, sorry, 10 points or so from where it closed, 10 or 15 points from where it closed, meaning that ASX is down around 80, 90 points, which could make sense, and see if you can find some support off that zone. Otherwise, it could just chop around, grind back up, and then sell off into the close ahead of the US. So it's a tough market at the moment. I haven't been doing much intraday just because it's been choppy. I mean, you could see where was it? This action, it was sort of selling down, popped up, selling down. So that was kind of choppy, and then turned on a dime. If you look at the 5-minute chart for yesterday's action, I mean, look at that. That just basically dropped like a stone, and this just rallied hard. So that was heading south with really minor lower highs, and then turned around, 5-minute candle, bang, up we go from there. So if you're looking to trade that, I mean, if I'm normally trading off my high lows, you haven't really got one. The one thing that you could have traded off this was that, let's go. So we got the low was put in place around, so 10:30 off the open. The low was put in place. That was a minor double bottom as well. Retest, or we call it retest failed. Not so much a double bottom, but a retest failed. Tried to go down, pulled back a bit, went down again, failed to continue on the downside at that level around 66, 67. Reacted strong straight off there, took out the opens highs, and even overnight, even overnight closing highs, I guess you'd call it, coming into the close, took out those highs. So it's just cleaning out traders. It's come back down into 230, and then basically popped from there. So that it did fall short of this level. So it is more of a major high or low, but really when you're going to cut rates and they tell you in advance you're going to cut it from 1 to 0.75, and you know that, you don't expect that sort of reaction on the upside. And unless you've really got a good news feed that you know that that's what the RBA is saying, they're talking up further rate cuts if need be, it's a hard buy. This just could have been buying in here, squeeze a few points, squeeze of these shorts, and then turn around and head south again. It pretty much bounced straight back up, was really strong, and just turned around. So that, I found that I wasn't even looking at it then, but I wouldn't have traded that. Way too hard for me, to be honest. And it was more of just a gamble trade, a gamble buy than anything else. And the buy should have come. If we just see that. Let's just actually go to one other view. I want this one. So this buy was, the momentum was down. You can see that. The momentum was crossing the zero line basically, but it was sort of touch and go. It was coming from below zero to above zero. So when it was confirmed above zero, you'd already got the second 5-minute candle. So the buying on that candle would have been a bit tough, because that it could have easily just rolled over, retested down to these lows, hold a lower high, and away you go. So yeah, tough going at the moment. So don't be concerned if you're not doing too much, and don't be concerned if you are and you're getting it wrong, because it's a whippy market. What I'm more concerned about is sort of the longer term outlook. Like Lauren said, the bear suit can come out now. I can well and truly put it on. I think it'd be interesting just to see how if this market grinds up and then we hold a lower high in the futures and the index. The index is down 36 at the moment. So look, it's not doing too bad. It's only half open. So expect it down another 30 points from the open. Which would take it. Oh, it's taken it right through there, isn't it? We have to go to a 30-minute chart. So we're looking at another 30 points, somewhere around 60, 70. So it takes it into this low, if that's the case. So be interesting to see where maybe it can fall short. It's not going to open as weak as we expect, somewhere around 85 or thereabouts, 85.90, these previous lows, and start to find some support off that. So what you're really looking for is bargain hunting. I would expect you're looking for the retail bargain hunting. If they come in, generally, like we said, your retail open, your professionals close the market. And if they're going to open looking for like a continuation of the last few days, it's not so bad, we sold off before, it's a good opportunity, we're going to bounce. It could be the time when it doesn't, and the US comes another 300 points tonight, and we sell off rather than 70, we end up down 100 today. There's always that outside chance, but it's just, I think it's time to be prudent and be careful at the moment, and just see what happens. All right, guys, I'll probably finish it there. Knock it on the head. We'll just see what the SPY's doing. Just minimize that. Keep an eye on it. It's still, we've washed out a few highs. It's just edging down at the moment, so potentially we are going to end up down to 30 with about 3 minutes to open, and then retest this low on the SPY anyway. It looks like the ASX is opening weaker. It's once you get into the S's, I think, which it really can kick off. 8 past or 9 past, 8 past, thereabouts. 8 past 10. All right, we'll call it a day there, guys. Good luck. Bear suits on for today, Lauren. Keep you happy. So any setups on the downside, on the upside, I won't be really looking at it today, just because I think you won't get much if this market's weak. Once it gets to down a certain level, people just get concerned. Trader gets concerned, so we'll see what happens. Yeah, deep sea diving like that. All right, so maybe it's not quite as weak as an open as we expect. You see it's only down 44 at the moment. The SPY's not, it's actually not too bad considering. So it opened up a bit. It probably squeezed out a few of these sellers, which is fine. You would have taken a few people who sold it on the way down, or maybe sold it late in that trend, has just taken money off the table on the close. Sorry, on the open of the SPY and the match. They got chipped out, or locked away some gains, whatever it may be. Market's sort of hovering around where it closed overnight, which still suggests another 30 points, 25, 30 points on the downside, which it may or may not get. So we might see this SPY bounce if this ASX doesn't open down. There you go, 63. So we're about there now. All right. Good luck, guys. We'll speak to you again tomorrow, and good luck with your day. Cheers. Bye.